Hello and welcome to the download. I'm your host, Dave Richardson, and it is Stu's Days on the farm. Stu, are you okay with that? Because I know you're in downtown Toronto, so it's not very farmy there.
No, not too farmy here, but it's since we like analogies, like your long-term portfolio, watch your crops grow.
Exactly, exactly. And I've got
Yeah,
I've got what have I got? I've got Highland cattle, a herd of Highland cattle just outside my back window here at the hotel, because the hotel is actually a
nice.
farm up in Charlevoix, Quebec. So they kind of look like yaks, but apparently they're Highland cattle. So yeah, so
All
it's
right.
pretty nice backdrop here for the podcast. Not for anyone listening or watching because I've got the back wall of a fairly dull hotel room, but I thought I'd mention that. But hey, we do have some excitement. I know you're excited about this, Stu, because this is a cherished colleague of yours, Sarah Nielsen, who we have on as a guest all the time on the podcast, and we got to get her on again soon. Named Top Gun. Well, you tell us, Stu. It's your
Yeah, well, it's always a nice honor. Like if there's going to be a contest, it's nice to do well. The whole team did extremely well, and these awards are called the Top Gun Awards. Which is a reflection. I think it's a good reflection for long-term performance because it's not necessarily who did the best in a given point in time, but it's a rating from your peers. Who has good relationships with management, who has thoughtful questions, who has asked thought-provoking questions, and I think all of the stuff lines up really well with investment process over the long term. So the team as a whole did extremely well, and Sarah Nielsen was rated the best of the bunch, which is an exceptional honor, and we're really proud of her. Sarah and Irene, took over some of our large mandates, our Irene
yeah.
Fernando last year, and are doing a great job. And we're just gonna keep at it like water on stone. Everyone is superstitious around here, so we'd be knocking on wood and all sorts of things. It's kind of like don't
Yep.
touch the cup,
Yep.
since we're in the middle of the Stanley Cup playoffs. But this kind of commitment to process and just the kind of constant, iterative, thoughtful process, has really paid off over time, and it's nice to see the team get
Yeah.
recognized.
Investment mind of the year, and I see you've had the chance to shave your Top Gun beard that you grow traditionally through the Top Gun season. So
Yeah,
Stu, I got a question. I got a good question for you here. I, so
yeah.
what words would you describe my chances of winning the Top Gun, mine chance of winning the Top Gun Investment Award, Investment Mind of the Year award?
Well, I guess it reminds me of that scene in Dumb and Dumber where it's like, so you're saying I got a chance?
No, no,
So
you're
there's a
missing.
chance, Dave.
I'll give you a clue. Tom Cruise, Top Gun, and Mission
Yeah.
Impossible. Oh, you get
Okay.
it?
There
There
you
we
go.
go. Okay,
Yeah.
well, enough amateur comedy hour here. But congratulations to Sarah. She's fantastic. We'll have her on. Don't worry, listeners. By the way, subscribe because then you won't miss any of the Top Guns that we have on here, including your like Top Gun Hall of Fame. I think for your career, they've you got the big award, right?
Yeah. Well, that's the same
Okay,
award that
very
Sarah
good.
got, but knock on
There
wood,
there we
we have
go.
it. And there's a handful of us here who've
So
had it.
we've
So
got Top Gun and Gun Investment Minds every week, several times a week here on the download. So subscribe, like the videos, whatever. I'm gonna have to learn how all this stuff works because I don't know how it does. But anyways, let's get into what's going on in investments because markets are doing pretty well. We talked last week. I think we were going to start with the Canadian banks because we can learn quite a bit about what's going on in Canadian markets once the Canadian banks start to report, and they're global organizations too to some extent. So it helps get a feel for what's going on all over. So who's reported so far, and what did you take out of it that was fairly interesting?
yeah. So TD Bank and Scotiabank have reported so far, and I think on the one thing that everyone was focused on was the Canadian economy still is kind of stuck in neutral. and it's a little sluggish out there. So with concerns over tariffs and unemployment and some things that might continue to degrade, people were looking for the banks to raise what they call their allowances on performing
Okay.
loans. And this is kind of like, putting allowances away for future potential credit losses. And that, in fact, was the case. Both banks did that. Um, the one interesting thing for TD was, some of their impaired loans, which came back to performing status, although those all weren't in
Yeah.
Canada. But that was interesting. So we expect this kind of across the group. And that that's just kind of good housekeeping. As far as business goes, it's a little sluggish out there in terms of loan growth and what have you. TD Bank called out less travel from
Sure.
Canadians, so
Yeah.
less using credit cards outside of the country and what have you. So there is this kind of malaise, which is fairly well understood. And then the other side was that the capital ratios were quite robust.
Oh, okay.
Um, so and that's something that kind of does three things for you. When you have a good capital position, you know that you're going to get through a downturn in good shape. Both banks, Scotiabank today put a small share buyback in, so you can
Yeah.
use some of that capital to buy back your shares should you need to. And of course, what they would all like to use their capital the most for is growth. And that's not immediately apparent, but there is a better tone, I would say, since the election about the potential for some growth in Canada, maybe in the back half of the year. And Scotiabank talked a little bit about that today. So there was the resource minister was out in Calgary, gave a speech, the throne speech today. New government, hopefully, some of the discuss points around the urgency and the size and redoing the economy that'll come into play, and that'll be a benefit to some domestic
So,
activity.
other than the Highland cattle outside my back window here, we might actually see animal spirits revived in Canada from a market perspective.
Well, it's kind of coming on
Okay.
two fronts. Like hopefully, domestically people are, I think we're all kind of in the soup, so we
Yeah.
feel it.
Yeah.
And there's a little bit of, there's a lot of houses for sale. There's some issues that need to kind of work through the pipeline, but nevertheless, there was great electoral turnout, and I think there is a bit more excitement around what could come on that side. And then globally, with the U.S. dollar peaking, and some of the big weights that people have in U.S. stocks as they start to move those into other countries, we do see a little bit of that. You never know for sure until Stats Canada comes out, but the trading desks are very good at trying
Yeah.
to pick up the crumbs and get an idea who it might be. And I do think we're seeing some more foreign appetite for Canadian stocks in the last couple of weeks as well. And so there's kind of two
And
fronts
and
there.
and so historically, Stu, when because we've been through several periods even to get working together over the years where capital's flown away from Canada and then capital flows back in. And when capital comes into Canada, what are foreign investors usually looking for in the Canadian market to stay
Well,
to get into?
yeah, like it tends to go to the big domestic sectors, which are financial services and
Yeah.
energy to some
Yeah.
degree. Um, and I think that's not just for Canada. I think we're seeing that around the world. We've seen Japan, Europe, a variety of countries start to do better. When I think we've discussed this, but the U.S. was such a strong market for so
Yeah.
long, and when you kind of break that outperformance down, you have a chunk that was due to stronger U.S. dollar versus the rest of the world. Um, whether or not the U.S. dollar weakens significantly is a good discussion, and I know you've
Yeah.
had Dagmar on and what have you to talk about that. But uh, the idea that it strengthens to the same degree it did in the last 10 years is likely not
Yeah.
to repeat. So we know that one for sure. Valuations have expanded. That was another chunk of the outperformance, and earnings grew faster. Um, so valuations unlikely to expand to the same degree again. And then on the earnings growth side standpoint, some of the things that are, we're seeing all these big numbers of like, this many billions into this data center, this thing, that thing. Um, that can help broaden what people think about. So it means some of the industrial stocks start to do better. Some of the the companies involved with people taking their NATO allocations up on the
Yep.
military side. More energy. This kind of more capital intensity. That can start to benefit some sectors elsewhere in the world. It means more loan growth. So financials represent a bigger chunk. So um, we've gone through this long period where, the U.S. was the only game in town, and just because others might join the party, the end of U.S. exceptionalism or whatever you want to call it sounds
Yeah.
very
Yeah.
dire.
Yeah.
It's really just that the party is more balanced rather than just having one band leading the
Yeah,
charge.
like I mean, the DAX hit an all-time high today. I believe the German index, the Canadian market has done, its bounce back has been very strong, but it comes along with the U.S. market, which peaked, the S&P 500 peaked, I think 6100 and change, fell down to 4800 and change, and is sitting around 5900 today. So that's still a pretty nice snapback in the U.S. But we're seeing other markets actually do a little bit better than the U.S. But as you say, it doesn't mean the U.S. has to necessarily lose. It just may fall a little bit behind on a relative basis, and that does create some real nice opportunities for investors to diversify because we've just seen too many Canadian investors. First of all, I'd say the longer term argument is Canadians tend to be a little bit too overweight in Canada to begin with, but then the place they go is just over the border. But there's lots of different places you can invest. And then again, for those who are more comfortable staying in Canada, maybe picking up some of that slack on the performance side ends up being good for those investors. So this is something we always like because we like investors winning. That's our favorite thing.
Yeah, and then we've done the tally of the the pros and cons. So the pros, as we think through them, valuations are better in some non-U.S. markets. We've talked in the past about um, another positive I is that the U.S. Federal Reserve could lower interest rates if they need to, stimulate the economy. And again, in the last week, we saw a little bit of the two-step on, I'm going to increase
Tariffs
European tariffs to I'm going to take them off. And so here we sit. Or we like from last week's podcast, we're basically at the same level. We went down a little bit and then
came
we
back
came
up.
back up. Um, so the three things that we think about positively in portfolios are starting valuations in the average stock. Um, the U.S. Federal Reserve could lower interest rates if they need to stimulate, and the do on the tariffs continues. The negatives are, the do causes a bit of a hit to
Yeah.
confidence. And the other thing is that as fiscal deficits kind of ratchet up around the world, the bond market hasn't taken it fully in stride. They've tried to express their dissatisfaction, and we're seeing uh, more volatility in interest rates. Just like overnight, like the Japanese 30-year bond had gone up and then dropped about 30 or 35 basis points. But nevertheless, like it's just a form of volatility that we need to take note of.
Yeah, and you want to take note of it because when those things are happening, and again, I mean, put in perspective, Stu, a 35 basis point move on a 30-year Japanese treasury. I mean, that is not something that happens every day. That is a very, very rare occurrence that you see that kind of a move. So that just speaks that there's still some things going on in terms of uncertainty around the market that you've got to be conscious of as an investor in terms of the strategy that you're implementing as you go around to look for where there's opportunities to get into assets that have better valuations and where capital around the world might be shifting to investing in those areas.
Yeah, no, I think that's a great way of framing it, Dave. Like um, one of the reasons, like we were talking about this before about, we've been talking about dollar cost averaging for so long. Like when your list of pros and cons has a meaningful number on
Yeah.
both sides,
Yeah.
uh, that kind of leads you to conclude about dollar cost averaging. If everyone was a pro, you'd be like, let's do it. If everyone was a con, you'd be like, red light. And the the headline valuation is a little expensive, the average stock better. The economy is going through some consternation, but the Federal Reserve could lower interest rates if necessary. They'll probably be a little bit delayed because of wanting to really make sure inflation's in the bottle. Trade, we'll see. Interest rates have been a little bit more volatile, so
Yeah.
there's pros and cons, and pros and cons tend to lead you if your financial plan was set on dollar cost averaging and the pros and cons are good, then you kind of carry on.
Yeah, and we're still in that frame of mind. We've been kind of locked here for a while, and then again, what's nice is you're adding to your portfolio. Just in terms of where it's being allocated, you're getting a little bit more of some different things than you maybe held over the last couple of years. I wanted to. There was a couple of things I wanted to bring up just to highlight because we've talked about them on previous episodes, but I always like to bring them forward. We're always adding new listeners, and when things are important, we want to repeat them. The One of the things that I thought was remarkable, I did a video for some advisors last week. When you look at the Trump announcement around the tariffs on the EU and the Apple tariff on the 25% tariff on the iPhones if you don't make them in the U.S. instead of India, and that there was a bit of a market reaction initially, certainly around Apple stock, but more broadly on the European tariff. But it was more muted than what we've seen on previous occasions when an announcement came out.
Mm-hmm.
And as you said, the market kind of went, oh, okay, here we go again. Okay, when is he going to relent? Oh, he relents, and we're just kind of back exactly where we were. It's not having the same impact that it was having, a month ago or certainly 3 months ago when all this started.
Yeah, like we have an indicator that tries to put it in a graphical form, and peak tariff happened on the same day as the low in the
Yeah,
stock market, as was often the case. um, when we think, and when you're in these environments, like nothing's going to be perfect, but when you get into those types of extremes, you're trying to be a lot more active and trying to put money to work. Um, and then when you get to here, you're back to a bit more of the
yeah.
balance, right? Um, and that's how we're
Yeah, I,
proceeding.
I just found it. I mean, even out, and I was out last week with a lot of investors and advisors up in the Quebec, and even the investors were just a little, it's just another one. It doesn't mean that much. They're kind of sloughing it off more and more. So that'll be an interesting one to watch as we go forward. If that just continues to be the case, that we finally reached that law of diminishing returns, and you can only shock so many people so many times, and then they just start to or you can cry. I think the actual one is you can only cry wolf so many times before people stop listening to you.
Yeah. No, I think there's some truth to that. I think that the one thing that we're wary of is that it's one thing for investors to say that, it's another thing for
Ah,
business. Like business is eventually where the earnings
yeah,
come from.
yeah.
So that's that'll kind of be the test, I think, as we move
Well,
through
and,
the
and
summer.
once again, Stu, there's another one of your examples of the pro and con, right? So pro, the investor's not sloughing it off, but businesses can't, and so that's another reason for you to be on kind of both sides of things and think about more of a more cautious
Yeah.
strategy of the dollar cost averaging instead of just dumping stuff in. Yeah. I thought one more sort of a classic. So there's one example of classic Stu that you get on virtually every episode of Stu's Days because it just never stops with this guy. But we were back in January, Stu, and we were talking about the extremes in terms of negativity around Canadian markets versus the U.S. and the extreme in the Canadian dollar low versus the U.S. dollar high. And you introduced the idea of you get to a point where the news is so bad that even the next phase of news, even if it's bad, it's not as bad as the last set of really bad news. And it's when you kind of hit that
Yep.
point, that's when you know you're kind of at some kind of inflection point or extreme. And I just think that is when you called it that day in January, it was just so bang on. Now we can look back several months later, and things evolve obviously, but feel pretty good that Canada kind of from a negativity standpoint sort of hit a bottom there, and as we started the conversation today, a little bit more reasons for optimism as we're sitting here now at the end of May.
Yeah, I think that's bang on.
Well, there we go. That's
Yep.
if you're a Top Gun, you don't miss your targets, Stu. So you were bang on that one. when you're not a Top Gun, you're missing all the time, which is why I'm going to stay away from those cattle. But I'm going to come back to see you next week, Stu, as I think everyone will. Stu, thanks as always for joining us on Stu's Days. See you next week.
Great. Thanks, Dave.
This recording has been provided by RBC Global Asset Management, Inc. for informational purposes only and is not intended to be investment or financial advice. You should consult your own legal, accounting, tax, investment, or financial planning advisors before engaging in any transactions.